Topping the news, more than $1 billion in insurance payouts and losses exceeding $2.5 billion are the daunting results of Hurricane Dorian's impact 2 months ago. The assessment from the central bank's monthly economic report issued today. Central Bank Governor John Roll also laid out a forecast indicating that the restoration of infrastructure in the northern Bahamas will be more than a year away. The central bank is holding to its positive growth projection for 2019, though it says the full impact of Hurricane Dorian has yet to be felt. Even against the backdrop of the storm and the uncertainty of world events, the central bank governor John Roll says major indicators do justify optimism.
Infrastructure in the northern Bahamas should be sufficiently restored to support resumed growth in 2021. Beyond the storm, the other fundamentals either posing risk or opportunities for the Bahamian economy remain. The global economic outlook has softened given heightened trade policy tensions and the uncertainties from the process of the United Kingdom's withdrawal from the European Union. One bright spot for the Bahamas is that U.S. consumer confidence has stayed strong, as have U.S. employment conditions.
The absence of winter resident accommodations in Abaco and only partial tourism recovery in Grand Bahama will mean some contraction, and personal losses are estimated at some $2.5 billion.
The majority of the damage that we experience from the hurricane will be property damage. We will also have a total estimate that indicate income that is lost during the period when the assets are out of service, but it is really housing stock, utilities, infrastructure, loss of business premises and inventory. Those are collectively where the majority of the losses will accumulate. And on that basis, 20% of GDP today for the Bahamas is at least $2.5 billion.
Many commercial banks have altered loan agreements to accommodate distressed clients, many of them offering 6-month-long moratoriums for residents whose credit represents about 14% of outstanding credit. But the governor says that is not cause for serious concern.
The central bank expects that overall lending will begin to expand over the near term as new lending outpaces ongoing repayments. Some of the results from the lending condition surveys released today show that demand for credit is now trending stronger than in 2018. Banks have also approved a larger share of these recent applications than in the past. And where applications have been unsuccessful, the most common reasons for such continue to center around households carrying too much debt or not putting up sufficient collateral to secure requested credit.
Going forward, the central bank says it will maintain an accommodative posture for private credit growth, including accommodations for families in storm-ravaged areas. The bank will also place greater focus on financial sector disaster recovery strategies, including how the digital currency can support more rapid return of commerce and aid in relief distribution.